Okay, so it's been a rough week, right? A sea of red pretty much everywhere you look, from crypto to the stock market, and everyone's asking the same thing. What in the world is going on? There's just so much noise, so much panic. So in this explainer, purely for educational purposes, we're going to try to cut through all of that by looking at the market through four very different lenses.
And you can just feel it, can't you? The mood out there is tense, to say the least. As Coin Bureau put it so simply, the sentiment has just completely cratered. You can practically taste the panic in the air, and it's showing up big time in one of the most watched indicators of market psychology.
And we're not just talking feelings here. There's a number for it. The Fear and Greed Index is sitting at a chilly 24, which is deep, deep in fear territory. Now get this, just 1 month ago, this thing was reading 74, firmly in greed. That is not a dip, that's a nosedive in confidence, and it happened fast.
And that fear? Oh, it's hitting people's portfolios hard. I mean, take a look at this. We're seeing a really sharp sell-off across the board. Bitcoin's down about 14% on the week, Ethereum even more. But here's the key thing. Look at the S&P 500. It's feeling the pain too. This isn't just a crypto thing. This is a market-wide shakedown.
So yeah, the headlines are screaming, prices are falling, emotions are running wild. It is super easy to feel completely lost in the chaos. The big question is, how do you even begin to make sense of it all? How do you find the actual signal in all of this deafening noise?
Well, that's exactly what we're going to do today. We're going to look at the fear, and then, for educational purposes, we're going to dive into 4 different playbooks to understand what's happening. The technical analyst, the psychologist, the Wall Street pro, and the principled investor. And then, we'll wrap up by talking about how you can pull all of this together to build your own lens.
All right, first up, the technical analyst's playbook. This approach is all about shutting out the noise, the news, the fear, all of it, and just focusing on one thing, the charts. What is the raw price data telling us? Okay, so to get inside the head of a technical analyst, you gotta know this term, bearish divergence. It's a classic red flag. Think of it like this. The price of an asset is pushing higher, hitting new peaks, but the indicators that measure the strength of that push are actually getting weaker. It's like a car's speedometer is going up, but you can hear the engine sputtering. It's a huge sign that the momentum is fading.
And from a technical analyst's perspective, these red flags are popping up all over the place right now. For example, Bitcoin hit a new high, but a big proxy stock like MicroStrategy didn't. We're seeing those bearish divergences we just talked about on the weekly charts, and here's the big one. Price has broken below the 50-week moving average. That is a huge deal for chart watchers, a major line in the sand. Honestly, it's all looking eerily similar to what happened right before the big drop in November 2021.
So you might be wondering, what does this mean for everything besides Bitcoin? You know, the so-called alt season. Well, a technical analyst would tell you that there are really only 2 times when alts go on a massive run. The first is that huge expansion phase, which, well, we've already seen that. The second is a temporary bounce after Bitcoin has already topped out for the cycle. So if you look at the charts, the hope for another big altcoin rally is basically a bet that the big peak is already behind us.
Okay, so we've looked at the charts. Now let's switch gears and look at the people behind the charts. This brings us to our second lens, the psychologist's playbook. This one is all about the human element, the raw, powerful emotions of fear and greed that really drive the markets.
And really, it all comes down to this classic quote from Warren Buffett. It sounds so simple, right? Be greedy when others are fearful. But actually doing it, man, that is incredibly hard. It means you have to go against the crowd, and even harder, go against your own gut instincts. It's the ultimate contrarian mindset.
So, what makes being a contrarian so tough? Well, a big part of it is a little thing our brains do called loss aversion. Basically, study after study has shown that losing $100 hurts about twice as much as gaining $100 feels good. And that little glitch in our wiring is a massive trap. It's what makes us sell in a panic at the bottom and buy in a frenzy at the top. Pretty much the exact opposite of what we should be doing.
And if we look at the recent drop through this psychological lens, you can see it wasn't just random panic. It was more like a domino effect. First, you had the big institutions start to take some profits off the table. Then some long-term holders saw that, got a little nervous, and decided to cash out too. That pushed the price down just enough to trigger a wave of liquidations for anyone trading with leverage. And boom, a small dip suddenly turns into a massive sell-off. The fear just fed on itself.
All right, let's zoom out for playbook number 3. We're moving from the individual mind to the global stage. This is the Wall Street playbook. These folks aren't just looking at charts or feelings, they're looking at the big picture stuff. Interest rates, economic reports, where the big money is moving, the whole shebang.
And right now, the one word to describe Wall Street is uncertainty. See, because of that recent 43-day government shutdown, a bunch of really important economic data never got released. We're talking about the exact numbers the Fed looks at to decide on interest rates. So in a way, the market has been flying completely blind. And if there's one thing big money traders hate, it's an information vacuum.
And on top of that uncertainty, you've got a few other major headwinds blowing. The Fed's been sounding pretty hawkish, hinting that rates might have to stay higher for longer. You've got money moving out of the big tech stocks over valuation concerns, and it's getting toward the end of the year. A lot of big funds are just cashing in their chips, locking in profits, which means there are fewer big buyers out there. All these things combined are just pushing the market down.
Okay, that brings us to our last lens. And this one's a little different. It's the principled investor's playbook. The whole idea here is to pretty much ignore all the daily noise we've been talking about. The charts, the fear, the news, and instead zoom way in on the one thing you can actually control, your own financial situation and your long-term plan. The philosophy here is all about a major mindset shift. A market downturn isn't a loss, it's a test. It's like a stress test for your entire financial plan. It's the moment you find out if your foundation is solid or if you've got some cracks you need to fix.
So what do you actually do? Well, it usually comes down to three pretty simple things. First, look at your own finances. Forget the market for a second. How's your cash flow? Can you aggressively tackle any high-interest debt? Second, look at your long-term plan and stick to it. This isn't the time to panic sell, it's the time to ask if you're properly diversified. And third, use this downtime to learn. The smarter you get, the less this kind of chaos can rattle you.
All right, so we've got 4 totally different ways of looking at the exact same market chaos. The technical analyst is reading charts, the psychologist is reading emotions, the Wall Street pro is reading the global economy, and the principled investor is reading their own bank statement. So what now? How do we put all these pieces together?
Well, you can see here how they all fit together. Each lens has its own focus, its own key thing it looks at, but also its own blind spot. The chart reader might totally miss a huge news story. The psychologist can get fooled by fake hype. The Wall Street pro might be too focused on the old guard and miss the next big thing. And the principled investor might be so focused on the long term they miss a short-term chance. The real magic isn't in picking just one. It's about using all of them to get that full 360-degree picture.
Look, at the end of the day, market noise and chaos, they're not going anywhere. That's a given. You can't control it. But what you can control is how you choose to look at it, the lens you use. By understanding these different playbooks, you can start to build your own and learn to separate the noise from the signal that actually matters for you. So the real question to leave you with is, what's your signal going to be?